So hi everyone. Today we have Amit with us. So Amit comes from a proper finance background. He completed his masters from Delhi School of Economics in 2015. So he started investing in 2017. So initially he started with short-term trading, F&O, and finally he realized that long-term investing is the best way to build and create wealth. Besides that, as a professional, he works for in banks from 2016 onwards. So he does credit rating for Indian and Indian subcontinent banks across India, Pakistan, Bangladesh, Sri Lanka, etc. So he has strong domain expertise in the banking and insurance sector. Besides that, he also runs a YouTube channel called Knowledge Station where he posts individual stock recommendations. Do He does a lot of deep research on individual stocks. So here we are going to do a series of videos on understanding how banking companies are valued, how banking companies are different from traditional companies, and how to value them, how to look at their numbers, balance sheet, and how to invest in them. So this will be a series of videos which will help you to understand the banking stocks and invest in them. So hi Amit.
Hey, hi Vignesh. Thanks for calling me here and giving me an opportunity to be on your channel.
Yeah, thank you. So since you have deep expertise in this sector, I thought we'll have a Q&A where a lot of questions are with people before investing in banks. So I would ask those questions to you so you can basically tell us your thoughts behind it. So first of all,
Sure.
how banks
I'll
are
try my best.
yeah. So first of all, how banks are different from normal companies? So normal companies have a different P&L statement, whereas banks profit and loss statement itself is completely different.
So, if you look at banks,
Mm.
uh, what banks do, if you would have seen a lot of videos, maybe the YouTube influencers or what do you call influencers who are making
Yeah.
videos on finance,
Mm,
they will have they will come up with certain
mm,
ratios, key ratios, and
mm,
that will be like you look at debt to equity, you look at return on capital, you look at return on equity, all those things.
yeah.
So a bank, when if you going to see those ratios, like if you look at banks, debt to
Mm,
equity,
mm,
obviously banks are in a business where they
mm,
take money from you,
mm.
right? When
Yeah.
they take the money from the public and then give
Mm,
the money to the public, right?
yeah. Mm,
So obviously banks are a business in a
mm,
lending where they're working in a more high leveraged, like banks are having high leverage
mm.
because your money is a liability for them, right?
Correct.
So yeah, so banks, they use 10% of, maybe 10% or 15% of their own money, and
Mm,
then rest is like taken, either they have taken from you or they have taken it in terms of bonds and all, they have taken it, and then they are lending it. They will give you an interest of, maybe if you're having an FD with the bank, a smaller
mm,
bank may give you higher FD,
mm,
that may be 7%, 8%, and then they will
mm,
lend it to someone else, and depending on which product they are lending to. Like if you're taking home loan,
mm,
the interest rate obviously going to be low, and then car loans, there's interest rate a bit higher than personal loans, and all different kind of your profile also, the
mm,
borrower's profile also matter,
mm,
because so then the difference, whatever they are giving interest to you and
mm,
whatever they are charging interest from you, right?
mm,
That's the difference between the banks,
mm,
whatever the banks money make, right? This is
mm,
how. However, in a normal company, what happen
mm,
if suppose an manufacturing company,
mm.
will manufacture something and then put a like
Price tag.
margin for themselves, yeah, margin for themselves, and then they will go there to the market, and
Mm,
whatever, depending on how sophisticated the product company is making, and
mm,
uh, how much their expertise is and how much the competition, all those things will be there, and then they
mm,
will be charging their product. That's how it is, like so. Banks are more, I would say, it's a commoditized business. Bank,
mm.
how it is a commoditized business, because the money has no brand. The money, a bank cannot say that I am having more expertise with this money,
Yeah.
because if you have to take a loan of, suppose, 50 lakhs of loan for your house,
Mm,
or maybe a crore of loan for you're buying
mm,
going to buy a flat.
mm,
So a crore of loan from HDFC will be same, and a
mm,
crore of loan from ICICI or from a state bank will be same, right?
mm,
It doesn't matter from which bank you're buying. The only thing you're going to see is how much interest HDFC is going to charge, how much interest ICICI is going to charge, how much
mm,
interest SBI is going to charge. More or less, you are like there may be some more paperwork with SBI or some lesser paperwork with some private bank.
mm,
I don't think there will be much difference in today's time on those things also. So it's a commoditized business more of.
mm,
Then the service part comes.
mm,
They're on a, if you're going to take a loan, which is uh, like which matters, like I'm not talking about some loan, maybe 5,000, 10,000 loans where people may go for convenience also. But
yeah,
if a loan uh,
mm,
which matters like 1 crore, 2 crores, and depending on the person's profile also, because
mm,
for someone maybe 1 crore is not a big amount, and someone it's a very big amount that will depend. But it's a commoditized business in a short, and
mm,
it's a leveraged business.
mm,
The only thing that banks protects banks from the other businesses, because they are highly regulated businesses where
mm,
RBI, you will see like you would have noticed that
mm,
getting the license of a bank is a tough task. They
yeah,
and RBI have their own terms and conditions where they don't give license to each and everyone who applies. They are
mm,
whatever the parameters they are applying there and all those things. So it's a
mm,
regulated business where you have to work in a certain way. So that's how banks are different. And maybe we can cover later on. This is
yeah,
the
yeah.
basic, like it's a commoditized business where nothing much changes,
Mm.
and it's like lending, taking money from one person and giving money to other person. That's how they work.
Yeah, got it. So I used to wonder why brokerage firms like Zerodha are not getting banking licenses as it would be easy for them. Now I realize that there is a lot of compliance and regulation which is probably stopping them. So the next question I would like to ask is, what are all the key parameters when, let's say, I want to invest in a banking stock or an NBFC stock? When I invest in a typical company, the numbers are different. So, what are the key parameters to analyze banks and NBFCs?
So it will depend, like how much the you your what kind of risk or what kind of returns you want,
Hmm.
basically. So if you
Hmm.
want, I would say if you want like don't want to take higher risk,
Hmm.
and then your returns would be also accordingly. So I would say like some banks like ICICI Bank, which are
Hmm.
into the business, or HDFC Bank, or for that matter,
Ah.
maybe Kotak Bank or Axis Bank, kind of these are the big bank, and then one can further go and study further like how their recent performance or what other management
Hmm.
changes are going, and then there will be different parameters, but on a very broad basis. First of all, you have to think about how
Ah.
much risk you're ready to take, because an
Got
ICICI
it.
Bank will not go 50% from their price, will not fall
Hmm.
50%, while if you're investing in an IDFC First Bank,
Hmm.
just imagine
Yeah.
the price can fall 50% from there. Like it has happened. It was like it went to 100 some maybe 1 or 2 years back, and then
Yeah.
the price fell to 50, and then
Hmm.
again 50 to 75, right?
Yeah.
So yeah, so it's like, and but ICICI Bank, you won't say like price going from 1,400 1,500 to
Hmm.
700 rupees. It doesn't fall like that. First of all, you have to decide in which category you want to invest into it. Is it going to be like a high risk, high return, or you want a consistent
Hmm.
performer like Bajaj Finance? Whatever happened with the NBFCs in last 6 7 months, some
Hmm.
microfinance lenders where the fell down like anything, like 50%,
Hmm.
60% price fell down. But Bajaj Finance, it was like the price was going up for Bajaj Finance while others are going down, right? So
Hmm.
first of all, you have to decide like which are you comfortable with a
Yeah.
consistently growing bank, or you want some
Hmm.
higher returns. First of all, that,
Yeah.
and then there will parameters will come.
Hmm.
Like the most important parameter that I would say is like return on asset for any bank or any NBFCs would come. So
Okay.
as I already told, the
Hmm.
asset for a bank would be their liability is the deposits which you have done with them, and the assets are the loans which they have given to you.
Hmm.
Assets will also include, apart from their loans,
Hmm.
banks have to put some money with the RBI
Hmm.
as per the regulations also, or they may have some money in the bonds and all also.
Hmm.
So that will also count as asset. So return on asset is a parameter, but most of their assets will be the loans given to the general public. So return on asset will tell you how much they are making on the total assets that they are having. So normally for banks, I would say greater than 2 is a very good number in Indian
Hmm.
context.
Hmm.
For NBFCs, it will, because NBFCs charge higher interest rates, and then they
Hmm.
don't have to have those regulations of putting the money with the RBI. Like
Ah.
you have your yeah, you have your cash reserve ratio and all those parameters with there. So
Hmm.
that's how a certain portion of banks' capital gets locked with the RBI.
Hmm.
So that's how it is. Like RBI, SLR, and CRR all are there, right? So, no, so NBFCs have higher ROA as compared to banks. Banks have a lower ROA, but
Hmm.
a bank normally 1 to 2 is quite normal for banks to have ROA between them.
Hmm.
A bank like ICICI does more than 2 ROA. HDFC, I believe 1.7, 1.8 would be there.
Hmm.
So it depends. Like the ratio is simple. Total profitability divided by your total average assets.
Hmm.
That will be your return on asset will be there. So
Hmm.
now, if once you see that what is the return asset of the bank,
Hmm.
then a lot of people talk about the return on equity also for the banks also. The return on equity is just your return on asset multiplied by the leverage, how much leverage the bank has taken, the leverage, because we already talked it's a highly leveraged business, right?
Hmm. Hmm.
So because uh, your return on equity will be return on asset multiplied by leverage. So I would say I would not focus on return on equity, because if an NBFC or
Hmm.
an or a bank has a high return on asset, so
Hmm.
they can manage their return on equity accordingly.
Hmm.
Like if I am having already 5 times
Hmm.
return on asset, five my return on assets is 5, so I can
Ah.
just go for a higher leverage. So what you
Hmm.
would see that in Indian context,
Hmm.
the PSU banks, which are like public sector banks, which are, so what they do, they give a higher amount of dividend. So because that they give a higher amount of dividend, so what happens? The cash is taken out from the balance sheet, right?
Hmm.
So
Got
what
it.
is there? What happens? Yeah. So equity is, if you see, equity is asset divided by your uh, liability, right?
Hmm. Correct. Correct.
Right. So what is liability? Liability is like uh, अगर आपने
Hmm.
asset निकाल लिया, some of the cash you
Hmm.
have taken out, so
Hmm.
obviously your equity will increase, right?
Yeah. Correct.
Return on, sorry, your equity will
ROE
decrease, and
will
your return on
ROE
yeah,
will go up.
and your return on equity will increase. Return on equity will increase. While in case of private banks, the return on equity is not as high, right? So
Hmm.
that's how it happens. Like कि if you see in your public sector banks में क्या होगा,
Hmm.
कि आपके जो रिटर्न ऑन इक्विटी होगी वो हायर हो सकती है, बिकॉज उनका लेवरेज भी हायर है, क्योंकि वो कैश टाइम टू टाइम निकालते रहते हैं, वाइल प्राइवेट सेक्टर बैंक्स में नहीं है. मे बी आई सेड
Hmm.
इक्विटी इज इक्वल टू एसेट डिवाइडेड बाय लायबिलिटी, इक्विटी इक्वल टू एसेट माइनस
Yeah.
लायबिलिटी.
Yeah.
Sorry for that
Yeah. Yeah.
confusion. I just realized maybe a flow I just spoke.
Hmm.
Okay, so that's how. So अगर आपने टाइम टू टाइम कैश निकालते जा रहे हो, तो आपकी
Hmm.
इक्विटी, ऑब्वियसली रिटर्न ऑन इक्विटी जो है, वो बढ़ जाएगी, क्योंकि आपकी लेवरेज बढ़ रही है. लेवरेज इज योर एसेट डिवाइडेड बाय योर liabilities. Now it is
Hmm.
like that, right? Your
Correct.
leverages.
Hmm.
So आपके अगर आपने कैश निकाल लिया, तो आपकी लाइबिलिटीज तो सेम है, एसेट कम हो जाएंगे. सो
Hmm.
एसेट बाय लाइबिलिटी, आपकी लेवरेज बढ़ जाएगी, जिसकी वजह से आप सेम रिटर्न एसेट पर आपका रिटर्न ऑन इक्विटी बढ़ जाएगा. सो दैट्स हाउ यूज से कि
Hmm.
जो हमारे पब्लिक सेक्टर बैंक्स होंगे वो 15 टाइम्स 16 टाइम्स तक लेवरेज है, वाइल जो हमारे प्राइवेट सेक्टर बैंक्स हैं वो 8 और 9 टाइम्स ही हैं.
Hmm.
एनबीएफसीज में वो और भी कम होगा. They can
Hmm.
also tweak accordingly. So that is how you can see. Then accordingly, a lot of things which you can see how diversified a bank or an NBFC is.
Okay.
This is like a qualitative parameter, not a quantitative. ये आपको दिखेगा नहीं. Nowhere in the financial you would be able to see it. But
Hmm.
कितना diversified है, कितने states में है. Just imagine कर्नाटका में government came up with something on the collections.
Hmm.
Collection में आप ये नहीं कर सकते, and then there's some points they have introduced कि भाई
Hmm.
इतना you don't have to you cannot force the person and all those things, and then the
Correct. Correct.
same was about to come in Tamil Nadu, right?
Yeah.
So if an NBFC or a bank is focused in these two states, the collections will impact. So how diversified the NBFC or bank is. The third point is how diversified their product portfolio is.
Hmm.
Suppose an NBFC is only into gold loans. I'm just giving an example. And then RBI will come up with some regulations with the gold loans, like the
Hmm.
on this much amount of gold you cannot give higher than this loan, right?
Yeah.
So if you are just imagine if RBI comes up and says कि 1 लाख रुपए के गोल्ड पे आप 50,000 से ज्यादा का लोन नहीं दे सकते और उससे भी कम कर देते हैं, so the
Mm.
NBFC which is totally dependent on this particular gold loan, they will get impacted, right?
Mm. Got it.
So
Got it.
that is also, yeah. And then something happens, just imagine if some NBFC is into vehicle financing also, and the economy is not going through a rough phase.
Correct.
So
Correct.
vehicle financing in the sense like some NBFC which is into trucks and all financing, maybe your
Yeah.
kind of
Shriram.
Shriram Finance. Yeah,
Yeah.
Shriram Finance. So they will be impacted there,
Mm.
right? That will happen, something like that. So these things will not be covered there. The third
Mm.
point, that as I already told you, it's a moderate business, it's a commoditized business
Mm.
where there is no differentiation, the money doesn't have any brand.
Mm.
I want to take a loan, I will go with the organization or the institutions whichever is giving me the lowest interest rates loan.
Mm.
So when you are into that kind of business जहाँ पर कोई भी differentiation नहीं है, you will try to go with a person जहाँ पर the
Mm.
management is very strong. So the history and background of the management or the person who's handling the organization also matters a lot in those kind of. I would give an example of a business of retailing. Retailers like uh, retailing is also a kind of a commoditized business, right?
Mm.
You go to shop and you ultimately you have to buy maybe a biscuit of Britannia or Parle-G, whatever you want,
Mm.
you can say,
Mm.
but you will buy from one store which
Mm.
will give you the lowest. It doesn't matter
Mm.
it's D-Mart, it doesn't matter it's V-Mart, it doesn't matter it's whatever mart,
Yeah.
right?
Correct.
Then the management matters a lot in those kind of businesses. But
Mm.
how Mr. Damani was able to scale it up while
Mm.
you will say the future, was not the person who was running the future, he was not able to scale it up, right?
Mm.
And then he took leverage and all those things happened, and at the time he got busted, right?
Mm.
So that's also an average kind of a business
Mm.
where ultimately you want to buy from the person who would be selling it to you at the lowest price. So in those businesses, management matters a lot. The history
Mm.
of management, how he has performed previously, how he is like how he is behaving with his shareholders, how he's treating his minority shareholders, because
Mm.
that will be valid in every each and every
Mm.
business that you would be going with, because
Yeah.
ultimately if management is not, so that is a very important parameter कि जो management है कितना experienced है आपका, how
Mm.
many cycles the management has seen from
Mm.
has do you have any past track record of the person. Normally the person is at the top, they have.
Mm.
So like in Indocent, we all know the past history of the promoters of Indocent,
Mm.
the Hinduja group. Maybe someone can Google also the Hinduja group, the history of Hinduja group.
Mm.
And so they already had a patchy history,
Correct.
right?
Mm.
And then you see high ROA with Indocent, everything will be high with Indocent, but they
Mm.
will never be getting that high price to book. The reason
Mm.
being is the management has a patchy history, which
Mm.
is being shown again and again. So you found first they
Yeah.
came up with the derivatives things, and then they were like, okay, we had some issues with our microfinance book also, and all those things they'll come up.
Accounting gimmicks.
Yeah, those kind of things will happen. So the same thing happened with ICICI till the time Chanda Kocha was there.
Correct.
ICICI was never getting a higher price to book, and then all they were doing
Mm.
some stuff which everyone knows. And then
Yeah.
the moment Sandeep Bakshi took it over and
Mm.
he started moving it in some other direction.
Mm.
And you see today what has happened, like I believe 200, 250 rupees the share was for a long time ICICI
Correct.
Bank share.
Correct.
And today it's like 7, 8 times in last 6 years, 6, 7 years.
Mm. Yeah, yeah.
The management, it's all about the management then. So these kind of businesses, these are moderate businesses. So
Mm.
this will not be captured anywhere
Mm.
in your financials. It will not be
Yeah.
captured. Then if you want to go dig deeper, you can go how many, what's the efficiency, like cost per employee, and then how efficient, how was the revenue per employee, how is the branch level, branch per revenue per branch, all those kind of
Mm.
things you can see. But uh, I believe the management at the top matters a lot.
Mm.
Diversification of product, diversification of business, how many state, that also
Mm.
matters a lot.
Yeah.
And then you can see how much of the book is secured, how much of the book is unsecured, how much of
Mm,
the book is related to MCLR, like how much of
mm,
the book is floating and how much of the book is fixed. Like in
mm,
today's scenario, when the interest rates are going down or
mm,
they have gone down already, if
mm,
someone is having a fixed interest book,
mm,
those NBFCs, higher amount of fixed income books, those NBFCs will having a higher margin, right? Because
mm,
from the banks, they will negotiate most of their borrowing will be on MCLR based, while
mm,
the lending that they have done, if that is based on a fixed book on a higher side, so they
mm,
don't have to lower the interest rate that they are charging. So they will be having higher margins out there. So
mm,
those things will matter which kind of cycle are there. So these are the broad base parameters which maybe one can
mm.
look.
Got it. So overall, ROA matters more than ROE. So diversification matters. So be it loans, be it product portfolio. Key important thing is diversification. And since this is a commoditized business, beyond financials, so we have to look at management. We have to look at the history of the management, bank's history, etc., to see if there is solid growth potential from this bank. So, since you mentioned about ICICI and HDFC, I would like to ask this question. After the last quarterly result of ICICI Bank, you tweeted saying that ICICI Bank is now becoming the new number one private bank in India, and it is surpassing HDFC Bank. So, maybe can you throw a couple of points about that?
I'm being like 2021. It was when I said I was talking to my friends and I was like,
Mm.
why I feel like the HDFC Bank or
Oh, yeah.
IDFC Bank, sorry, ICICI Bank,
Mm.
it will be the next decade's HDFC Bank. Like it will be an HDFC Bank may not. So I because I was working with ICICI Bank, and there
Mm.
were changes at the organizational level. So I will
Mm.
give us few examples, and I'm a like big fan of Sandeep Bakshi, who's the current
Mm.
MD and CEO at the bank.
Got it.
You won't see him in any interview also.
Correct, correct.
The best thing, yeah, and Mr. Damani also the same thing. The best of the promoters, they never come on TV and advertise
Post about their
themselves.
company, yeah.
Yeah,
They
so
silently do the
uh,
job.
yeah, they do their own work rather than coming on TV. So I would give you three examples. Like when I
Mm.
joined ICICI Bank,
Mm.
there used to be no leaves in the first year for any employee.
Okay.
Like first year,
Interesting.
you don't have any leaves apart from sick leaves, right?
Okay.
Right.
Okay.
Your notice period used to be 3 months.
Okay.
Okay.
Mm.
And then the third point was some people used to get promotions very fast, and some
Mm.
people were stuck at a particular role.
Mm.
That used to be there, and it
Mm.
would happen. It would be happening with the most of the organization. That the worst thing can happen
Yeah.
with the organization, and then
Mm.
the people leave. The people leave then. So
Mm.
what he did, as soon as Mr. Bakshi joined, in next 6 months, what changes changed in the organization?
Mm.
The first thing he did was first year people started getting leaves. Like
Okay.
why can't people get leaves in the first year, right? They have
Yeah.
to go to home and all those things can happen in the first year also.
Correct, correct.
The second thing he said, once the person puts the notice period like his
Mm.
papers,
Mm.
anyway the person is not going to work.
Mm.
He will not be feeling that attached to the organization, all those things, because already
True.
has another offer which is better than this one, and
Yeah,
that's why
yeah.
he's
Basically,
leaving, right?
he changed the work culture
Yeah,
and made
yeah.
employees feel a lot more
So
secure.
true. So that's why he's like from 3 months. I believe now the notice period in ICICI Bank is 1 month only.
Yeah, yeah.
It's even lesser than some of the MNCs out there, right?
Mm. So basically, the change
And then
was internal. Yeah.
yeah, and then the third point was like some people used to get promoted very faster, and then some people used to.
Mm.
What he did, I believe every 2 or 3 year there has to be a mandatory promotion till particular band level, right?
Mm.
Uh, So it's like if you're not getting the worst rating, like I believe I'm not very sure how the rating nowadays. It used to be
Mm.
1, 2, 3, 4 previously.
Yeah,
So
yeah.
four was the worst. If you're
Mm.
not getting the four one,
Mm.
and if you're among 1, 2, and 3, so you will be getting promoted every third year, irrespective
Got it,
of
got
which
it.
rating you are
So
getting.
besides changing the culture, what else he did which made the company more from an
Yeah,
external point of
and
business
then
point of view?
yeah, and then from there. The company was previously majorly focused into corporate loans, and then they started doing towards retail, moving it towards retail. And you
Mm.
have seen some of the products. which are very talked about, their Amazon ICICI card, right? Which is the
Correct, correct.
partnership. I believe every person would have taken that. That was
Correct.
a kind of a product because it's a good product. So
Mm,
they started
mm,
moving towards that, and
okay.
nowadays most of the loans that they are giving, I believe a major
Mm,
chunk they have shifted. Like
mm,
I don't know the exact numbers, but if you see compare last 6 years,
mm.
approximately 20-30% of the shift has been, if previously they were doing 50% corporate, 50% retail, now it would be 70% retail. That's what my assumption would be. I
Wow.
haven't checked the numbers recently.
Mm,
So that is something has changed. That has started reflecting in the business also. ROA
mm,
got improved there,
mm,
obviously. And then if your ROA improves, their ROE automatically improves. All those things got changed there. And then the multiplication, like the multiple that ICICI Bank used to get, it was like maybe 1.5 or two price to book. Now it was getting 3.5 or four,
mm,
and that is the most in today's time is the most pricey bank, you would say. Previously, the Kotak Bank, then
mm,
Kotak was used to trade at 5.5. ICICI was trading maybe 2.5. I'm talking about
mm,
6-7 years back. Now
mm,
ICICI is trading at 3.5 somewhere around, and Kotak is trading maybe 2.5,
mm.
right? 2.5.
Correct.
So that has changed. So
Mm.
that has changed over the years
Got
in the
it.
bank.
So what are the key parameters for the valuation of banks and NBFCs?
It would be price to book, obviously,
Mm,
because banks keep on issuing equity and then they keep on diluting their number of
mm,
shares get keep on
mm,
getting. So if you are looking at price to earnings
mm,
of a bank, so maybe today they have some 1,000 shares and tomorrow they issue
mm,
100 more shares, and
mm,
when the price to earning will come down. So price to book is a better because book most of the banks book is built it off
mm,
assets are their mm, loans that they have given to you, or if it is not, you just take the price book value of a bank and
mm.
then just remove the fixed assets from there. Fixed assets is like there would be some building, maybe ICICI has an office in Bandra Kurla complex in their balance sheet. So you
Yeah,
just remove that and then just take the assets which are into the cash assets and then adjust it. The
yeah.
book value is like your asset minus liability is your book value. Just adjust those things, fixed assets, and then you can
Yeah,
just look
in
at
other
it.
companies they'll have the assets as such. They'll not change the numbers. So whereas in banks it will be market to market, right? So every quarter the book value would vary, right? So can you explain more about the mark to market thing?
So what happens is
Mm,
you have three kind of assets.
mm,
Financial asset. This happens with the
mm,
financial assets only. It
mm,
will not happen with your fixed assets, obviously, with the
got it.
mark to market because they are not valued on a
Mm,
regular basis. So there are three kind of assets.
mm,
Uh, the assets which are held for trading purpose,
huh,
right? And then the assets which are held for they are not for trading purpose, but
mm,
they are not uh, they are your investment assets maybe, right?
got
And the
it.
third kind of assets which are known as HTM, which is like held till maturity. Some
Mm,
bonds, those bonds are allowed. I don't think banks are again repricing them or marking to market there
uh,
them.
mm,
But the assets, the other two kind of assets
mm,
where which are held for trading के लिए, and the other was like which are investments, or mostly those investments are into
uh,
equities only.
mm,
So held to maturity can only be happening in the case
mm,
of bonds held till maturity, HTM assets, which we HTM
mm,
bonds or whatever you want to call.
mm,
HTM cannot happen in case of if you are holding some equity, that cannot happen. So
got
these are similar. I believe all the companies with normal
it. Yeah.
companies also follow the same if they have financial assets with them.
Mm,
They have to classify like bonds के case में they have to classify कि if they are going to hold it for till maturity, because if you are holding a bond till maturity, the
mm,
final amount you are going to get will not change irrespective of the interest rates, whatever
mm,
the interest rates be in the economy, right?
got it.
But if you are having that, if your asset with like bond, which you
Ah,
may sell and
uh,
interest rates go up or down, so the
mm,
value of the bond changes accordingly.
got it, got it. So for the valuation, is there anything else beyond the price to book that is important?
Price to book,
This is the
I'm not
most.
sure. P basis, I won't be checking P
Yeah,
basis, but
yeah.
sometimes what happens, there are
Mm,
financial companies,
Mm.
they will be having, they're more of like a conglomerate.
Mm.
I would say like if you go and check AB Capital, right?
Mm.
So AB Capital, it has Aditya Birla Mutual Fund.
Mm.
It has Aditya Birla Insurance also. Aditya
AMC.
Birla Life Insurance, Health Insurance, they also issue. Then Aditya Birla, that AB Money also there.
Yeah.
Then Aditya Birla has an NBFC also with them,
Mm.
right?
Correct.
And like they have multiple kind of businesses. So in
Mm.
that kind
Those
of scenario,
scenarios,
if
it makes sense to even look at a price to earnings as well.
no. So in that
Okay.
kind of scenario,
Mm.
what you would want to do,
Mm.
they're like some of the parts valuation, SOTP
Mm.
valuation you would like to do in that kind of scenario. So you would want to every business you would read on a
Mm.
standalone basis and just try to compare it with the uh, relative peers of them, and then those businesses, like you just add that those valuations, and then maybe you will come up, and then maybe because they are in a consolidated group entity, then you would
Mm.
want to apply a certain discount there,
Mm.
holding company discount.
Mm.
And if you remember, like last, I tweeted about AB Capital couple of times in
Correct.
last 2 3 months, and
Mm.
then because AB Capital in recent fall, the company went till 150 or 160 rupees, and then
Mm.
from there it is like now approximately 280 rupees, which is 70 80%, 60 70% up from there.
Yeah.
And the company was available as 6 7 8 or 9 multiple. It was available 8 or 9 multiple maybe. That
Mm.
was it. And
Mm.
I calculated, and I was like some of the parts I calculated them, and it was coming much more than that. So
Mm.
that's how like I thought of buying that.
Mm.
So that, that's how it was like.
Yeah. So yeah, so there are some key indicators that are indicating that you may head into a new banking and NBFC cycle. So we have a lot of other interesting questions as well. So we'll continue it in the next part of this video. So subscribe to the channel. Keep listening to more banking and NBFC stock insights, which are real deep from Amit. Thanks for watching this video. Subscribe to the channel. Thank you.
Thank you. Thanks a lot, Vignesh. Thank you. Yeah. Bye. Bye.